Hey, if you wanted to get off of the loan officer roller coaster, or you say, what the heck? The loan officers have a roller coaster? You're listening to the right episode of the Loan Officer Leadership Podcast. I'm your host, Steve Kiles, and Carl White. We have a great conversation today. You and I have been talking to a ton of just really good loan officers that are having great volume. You just came off the boot camp. We had that just about a week ago. So much fun. And one of the conversations is this. I was even talking to one of our branch managers here, and man, crazy numbers. Threw up 22 units and then dropped down to 14. 22 units, dropped down to 14. And then he's like, well, Steve, how do I consistently get to the 30 units and stop dropping back down? I was talking to Nilesh, big shout out to you. Yesterday, we had a great conversation. He's been in the business 3 years, Carl. And listen, like he's been hitting that 6, 7, drop back down to 2, 3. It's that it goes back to you have a big month, but then I fall back down. What the heck is going on? I was thinking about Laura and some of these other conversations. And how do we get off of the loan officer roller coaster? I've got this volume. I've done the work. I'm making the calls. I'm having the touch the lead, touch the partner. I'm focused on the right activity, but it goes up and then it comes down. Talk to me, Carl.
So, so, so by the way, so I love these. See, these are my favorite episodes when one of us has no clue what the
You
other
had
is
no
going to
idea
talk
what I was
about.
going to talk. We
And
didn't even talk about it.
we just
Hit
click
the
the
record.
record button and
Yeah.
and one of us goes, okay, here's what we're going to be talking about. So I think the loan officer roller coaster, I think, the first thing anytime I hear a problem, I go right into, and maybe it's good, maybe it's not, but I got to right into what's the solution,
Yeah.
right? Because I'm a problem solving guy.
Yep.
And so I instantly go, which annoys the heck out of the lovely Mrs. White, by the way, because she'll
She
say,
wants you just to
"Hey,
listen, not
yeah,
solve.
just listen first, right?" And it's
Stop.
like, "Yeah, but I've heard enough. I can solve this problem." And she doesn't want me to solve the problem. She wants me to listen, right? So we could do a whole podcast episode on that, right? And so I think on the solution part, there's two kinds of the loan officer roller coaster.
Okay. Talk to me.
And it's a time thing. One is I'm up this month, then down the next, up this month and down the next. There's another one though, Steve. I'm up this year, I'm down the next.
Mm.
I'm up this year, I'm down the next two. I'm up for 2 years, I'm down for three.
Yeah.
And they're different causes, different
Let's talk
causes.
about it. That's good.
So, which one
So
you want to talk about?
let's start with the one that's a month. Because
Okay.
I think even for me, I want to hear your perspective on it because that's a lot of the conversation right now. It's like,
Yeah.
man, January was big, February's down. I'm trying to rebuild for March. February was up, March is down. It's like I'm trying to rebuild for April. So it's like, somebody who's seeing the monthly flow, how do we get off of it? Like what would you say? What's the solution to that?
Well, I think on the um on the month to month one, that's usually pretty easy.
Okay, let's talk about it.
Actually, I think they both are. It's actually pretty easy. It's the month to month is I do an activity, I bring in some loans,
Yep.
and then I get busy closing those loans. And I stop doing the activity that brought in those loans. And so the following month, I wasn't doing the prospecting because I was too busy closing. And that
Mhm.
causes the month to month loan officer roller coaster effect, right?
Yep. Yep.
And which is an easy one to fix because it's just like, well, what was the activity that you stopped doing when you got busy? And we've done episodes on this before, back to activity A versus activity B. Activity
Yep.
A
Yep.
is doing that activity that brings in the loans, and then activity B is closing those loans. And if I'm the one doing activity B, closing those loans, nobody's doing activity A. And of course, I'm going to have a down month next month because I wasn't doing the activity that brought the loans in this month because I was too busy closing. And that's just a simple who question,
Yeah. Talk
right?
about that.
Well, so for us, where we see loan officers have their greatest effect is they
Mhm.
focus on the loan getting activity, and then the loan closing activity is done by a hired help,
Yep.
which frankly doesn't cost that much money. because all the money is made on making the phone ring. So
That's right.
the person making the hamburger doesn't make money. The person that got the person to drive up to the drive-through in the first place,
That's right.
that's the person that makes all the money, right? That's the one that makes 90% of the money. The actual hamburger cook, so to speak, great, nothing wrong with that, right? Awesome person. It's just a lower activity, just like my mailman makes less money than Patrick Mahomes does throwing a football,
Yeah.
right? I mean, it's just, I'm not the one that sets these rules. It's just the way that it is. And so the loan getting business is very lucrative, pays very well. The loan closing business still pays good, right? But that's like 50, 60,000 a year.
Yep.
Whereas loan originator, 10 times that, easy, like
Yeah.
easy 10 times that.
100%. Yeah.
So, all right. So no judgment on people. It's just different activities pay better than others. And you don't want to be doing $50,000 activity when you can be doing $500,000 activity,
That's
right?
it.
So that's the
Hey,
short
well, and
term.
listen, and let me say this. So it goes back to sales is the loan getting activity, and sales fulfillment, how we say it, is what happens when the phone rings. And if you're trapped in doing the sales fulfillment, one of the things Carl and I believe is this: loan officers should have exceptional loan partner support that keeps them out of the files. Because here's what we know: if you're out getting more relationships and you're building more authentic, meaningful relationships with top producing agents, then that's going to be what leads to your lifestyle and life of freedom and what you deserve, not chasing a condition. And so part of the roller coaster, and here's what I was thinking, Carl. Part of that is there may be a gap. Like right now, the back end strength may not be as strong as it needs to be. Well, that's simple. Talk to your manager, talk to somebody, and
Mhm.
say, hey, look, when I go get a loan and I hand it off, do everything you can to keep me out of the back of the file. Like you chase conditions, you talk to the title company, you do all the busy work. That way, I can give us the job security and job stability of going to get more. And I was even thinking about this, Carl, as an act of coolness. If that's one thing, jump in my calendar, my personal calendar. It's not anybody else's. Go to meetupwithsteve.com. If you're at that level where you're doing more than 5 units a month, or you're at 15 trying to get to 20, or you're trying to say, okay, what does that team member look like? Because here's what we typically find, Carl. If you're doing 0, 1, 2, or 3, that's not a who issue. That's a discipline and plan. Like, do you have the right plan? But when you get to 5, 6, 7, especially that 7, the wheels will come off if you don't have the right who doing the right activity. And Carl, one of the things we did is inside of the marketing animals, we actually have the playbook of what each team member does. And book into my calendar, meetupwithsteve.com, just find a 30 minutes. And what I'll do is I'll actually give you the structure of what that back end loan partner needs to do. Because Carl, when you said it's relatively easy, I would 100% agree. Because if they'll do that, then you can focus on sales, and sales is what got your 5, 7, 10, 15, 20 deals back into the door. So, or back in, and helped you close it. So that's
Yeah, there's
awesome.
only one reason why there's one loan officer closing 10 and another loan officer closing one. And it's simply that the one closing 10 is doing more sales activity
That's it.
than the one doing one,
Yeah.
right? It's, I mean, it's,
100%.
it's no more complicated than
100%.
that. Hey, just briefly, so that's the monthly roller coaster.
I want to hear your yearly. What are you thinking about on the year? Because we've
Oh,
seen that too, man. Ups and downs and
oh,
ups and
dude,
downs.
it's always the same thing, by the way, always. And
And this is
dude,
after,
as
guys,
guilty of this as anybody. It's always the same thing.
if you're
So
not watching, you didn't see him roll his eyes because
yeah, oh, dude,
he's like, oh.
it's a personal, painful story to even talk about this,
Okay,
right?
so let's talk about it then.
So on this one, we have great success.
Yeah.
So then we get so busy patting ourselves on the back and telling
Mm,
ourselves how successful we are. So it
wow.
comes complacency, right?
Yep.
Success leads to complacency. We start wearing all those Super Bowl rings, and it starts weighing down our hands, and we stop doing as much activity. Right. It's just the way it is.
I
Right.
can't pick up the phone. My hand's so heavy.
I got too much money in my hand from last year that I'm having trouble picking up the phone because of all the weight of carrying this gold around in my pockets. Right. So then success leads to complacency,
Wow.
and then complacency, we know where that goes to. That
Yeah.
leads to failure,
Yeah.
right? And not failure as a human being, just failure of success. Let's just say it that way.
Yeah.
And then when I have failure, I spend time learning again.
Yep.
And then when I learn and then apply that knowledge, I have success.
Yep.
And then when I have success, I have complacency. I have complacency. I have failure. I have failure. I have learning. When I have learning, I have success. And it keeps that
It's a
thing. But let
cycle.
me,
Yeah.
it is a cycle, but you can break that cycle, man.
Yeah.
So just like we can break the cycle of the month to month roller coaster, this long term roller coaster, because I can tell you right now what the fix of that is. So on the month to month, it's a who issue,
That's right.
right? On the year to year, year over year roller coaster, that's a discipline issue.
Mm.
Two totally different things. That's a
Hmm.
discipline issue.
Yeah.
And having somebody in my corner that
Mm.
when I'm winning,
Mm.
so here's the thing. You know what?
Hey, it's
I
two
was just
things. It's discipline and accountability.
well, which is yes, because there's no discipline without accountability.
There you go. That's
Yeah,
it,
there's
man.
no discipline without accountability.
Yeah.
And I'm trying to remember who it was. Gosh darn it. There was a famous basketball player, and at the end of every game, when he won, he'd wait till the fans leave, and then he'd go back on the court before he went home. So I know Michael Jordan did it when he lost. Like when he lost, he would shoot more baskets. And I was reading about that, and it told a story of another one. Was it Larry Bird? It was one of the greats.
Yeah.
I can't remember who it was, but one of the greats said that after every winning game, he would
Mm.
go back on the court
Wow.
and just practice and practice and
Going back
practice
up.
and practice and
Going back
practice
up.
because he didn't want to get so busy drinking his champagne
Mm.
that he lost the discipline of going back on the court. And by the way, he paid somebody to stand there with him to hold him accountable to make
Mm.
sure that hey, and it's okay to drink some champagne. And
Yep.
I'm using air quotes here. It's
Yep.
okay to go drink some champagne, but we can't that drinking champagne can't be our strategy going forward, right? There's nothing wrong with spiking the ball. There's nothing
Yeah.
wrong with in the end zone doing your little victory
Yeah.
dance. Nothing wrong with that at all.
Yeah.
But it is accompanied by going out there and in basketball terms, shooting some hoops, right?
Hmm.
Just continuously doing it on and on and on.
Mm.
So if you're finding yourself on a roller coaster from year over year, it's and we want to blame it on, well, it's the industry, it's the
Hmm.
rates, it's
Hmm.
the uh uh inventory, it's the yada 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 yada, right? It's everything but me. Because when I
Yeah.
point at me, that's very painful. It's much
Yeah.
easier to say, well, it's the rates. But when we say that, we still have loan officers closing 60, 70, 80 loans a month. We have loan officers that closed, gosh, it was just somebody that I was talking to yesterday, or maybe it was a boot camp. No, it was yesterday. Who was that? He had closed zero loans like last January, February, March. And this January, February, I think he had like was 11, 12. I wish I remember their name because I like to give credit. But anyway, so Steve, you and I have seen a lot
Hmm.
of loan officers that last year they were doing nothing.
Yeah.
And then this year they're closing high singles or double digit loans.
That's it.
You're
Yeah.
Sarah Cox, another
Yeah.
example, right?
Yeah.
So, was doing just okay last year. Or, one of our personal favorites, Mary Lee Brown.
Yep. Hmm.
Last January, February, she closed zero. This January, she closed, I think it was ended up being, what was it, like 14, I
17.
think.
Yeah. 15,
14. And then
16. Yeah.
February, I think I think it's 17, something like that.
Yep. That's
So we
right.
can't say it's the
Hmm.
market, it's the industry, when there's other loan officers in the same market, the same industry are going from one or two to 17.
That's it.
It's a
That's it.
discipline issue. It's
That's
not the
it.
market, it's not the rates, it's a discipline issue.
Hey, so
So,
talk to me about this.
what do we do about that, Steve?
Go back one and just tell me about discipline. So how would somebody practically be disciplined? Because I've got a thought about it, but I'd love to hear yours. So the year over year is a discipline issue. What do they do about that? Okay, I recognize I am. I'm that guy. Somebody's listening says I'm going round and round. What would you say they do?
I would do the same thing that Tiger Woods does, that Michael Jordan does, that Kyle Busch does, that Richard Petty did, that
Yep,
Dale Earnhardt Jr. did, that insert any famous, highly successful person do.
you
And
gotta.
and this is going to sound like a like a,
Yeah,
a pitch, but it's the truth. They
that's it.
pay for discipline.
They pay people to hold them accountable at the
That's it.
highest level. Hey, and
That's it. And,
listen,
and they don't go, I'm at the highest level. But I don't need to do that anymore.
They actually hire more
Zero.
coaches.
They hire
They
more.
typically have more coaches than anybody
Yeah.
else.
Yeah. There
Hey,
is no other answer. And I know it's like, well, gosh, you guys do coaching, but that is the truth.
it is the truth.
If you want to run faster laps, if you want to get a gold medal at the Olympics, boy, you got to run laps, right? There's
That's
just
it.
no way around that,
That's
right?
it.
There's no book that you can read. There's no magic bean that you can take. You get out there and run some laps,
You
right?
just take massive
And
action.
yeah,
That's it.
and so you have to have somebody sitting there that you're accountable to, that's
Mm-hmm.
making sure that you show up and that you run your laps. And I'm not talking about 7 days a week, 80 hours a week. I'm talking about short bursts of your working schedule,
Mm-hmm.
like 3, 4 hours a day, that you spend that time prospecting, answering to somebody.
Yep.
And the struggle bunnies don't want to answer. So, well, I don't want to do that. I don't want to
No.
do that.
Yeah.
Right.
And
But the
that's why they're
winners,
struggling. Yeah,
that's why
that's
they're
right.
struggling. And
That's right.
the
Yep.
winners, there's just no way around it. What's the one thing 100% of the winners have in common?
They got a coach.
They got a coach that's
Holding
not.
them
They
accountable
know what to do. They need the discipline to do what they know to do. So this is
every
not
single day.
necessarily mentorship is telling you, sharing with you what to do,
Yeah.
and then coaching is the discipline to apply what you know to do.
That's
Two different
100% it.
things. So yeah.
Yeah. And hey, and if you're listening, you're saying, man, this resonates with me. I recognize there's a cycle that I've been on. Go to freedomplanningcall.com, freedomplanningcall.com. Put in a couple of pieces of information, man. We'll jump on the call with you, talk to you about what coaching would look like for you and your business. Because Carl, you nailed it. I mean, that's exactly what it is. It's the accountability, it's the discipline. It helps you show up when you don't feel like showing up. And what we've learned is actions first, feelings follow. And if you want to be successful, and the divide has gotten wider, Carl. Everybody started over. Everybody this year is a day one loan officer. The question is, how come there are some that are doing 0, 1, 2? And then, like we interviewed Kenneth a couple episodes back, December 4 or November, what was it like? November 4, December 2, January 2, February 10. March will be more than double digits. Like these are fundings per month. And you know what the divide is? It's exactly what you said. They've got a coach that's holding them accountable and somebody that is literally there in and out, day in and day out. So freedomplanningcall.com, if that's something you feel like resonates with you. Because Carl, you said it too. We believe you can double your income without working more hours. And we can help you with that. And by showing up every single day. So freedomplanningcall.com. Man, good stuff.
All right,
Any
man.
other
I think
thoughts?
we're
That's
good,
it.
dude. I think we
All
covered
right.
it, man.
Okay. Well,
Yeah.
listen.
So
Hey, and remember this, everybody. Anything worth doing is worth doing badly. Just get started. See ya.